Hi everyone, welcome to the second episode of Market Chats. Today's guest is Jack, or AlphaCharts, and he is another one of my favorite follows on Twitter, always posting great charts and ideas that I use in my own trading process. And recently he's also started his own YouTube channel, and both of those will be linked below, so feel free to check that out. Jack, great to have you on.
Thanks, Richard. I'm glad to be here.
Great. So there's a couple things that I would like to focus on today. First, you've told me that you're completely self-taught with from books, webinars, etc. So I'd love to talk about that and kind of any resources that you recommend to really accelerate this learning process. And then I'd like to transition over to risk management, since it's such an important concept in stock trading. And then finally, in your YouTube videos, you talk about a bunch of different ETFs that you use to help determine that market health. So I'd love to go into that with you. And yeah, that's kind of the overall plan.
Awesome. All right, perfect. So I'll tell you just a little bit about myself.
Sure.
I started trading about 5 years ago or so.
Mm-hmm.
So I'm actually fairly new. So I went to college. I'm a pharmacist by trade. Mm-hmm. So that's what I do during the day. I consider myself to have two full-time jobs because I do take trading very, very seriously. Mm-hmm. So my days off and nights is the best time where I like to look at the market. So how did I come to learn the market? And so really just consuming what's out there. I started out, I think, looking on the financials, side, and it just didn't make sense to me. It just didn't make sense. I was trying to work numbers and PE ratios and this and that, and it just didn't work. So I started reading some blogs. Actually, AlphaCharts, JC Peretz was one of the first ones I read about technical analysis, and that hooked me. And I was like, okay, I got to get more into this. And so reading, consuming, blogs and information everywhere I could. I would be following, somebody threw a webinar up, I'm watching it, And so, along my journey, I think there wasn't one thing or one person that I can really point to that I say, oh, I'm just like that person. But I took a little idea from here and a little bit idea from there, and it took years of watching and consuming and reading books and webinars to really create and weave what my process is. And so it's unique. It's not like anybody else's, and I think most people can say that no one's process is purely like somebody else's. And that's kind of how I did it. I love listening to the greats or people that do this for a living, full time. Whether it's through a podcast, whether it's through a webinar, whether it's through an interview. There's so many great nuggets that are just out there for the taking that people share freely.
For sure.
Twitter's been amazing. If you notice who I follow on Twitter, it's about 65, 66 people, and only half of them are probably traders, because I don't want to confuse, good and great, right? I want to follow great. I want to follow people that are really throwing out great ideas and growing and doing amazing things. Sharing really, really awesome ideas. The other thing with Twitter is that time frame matters. So there's a lot of great traders out there I don't follow, not because they're not good, because my time frame is different than theirs, and that's confusing. That's noise for me. And it took me a while to understand that. That was something that actually, once I changed that, it helped me immensely.
What time frame do you focus on?
So I'm a weeks to months trader. I do have a full-time job, so outside of trading. So for me to be a day trader doesn't really work.
It doesn't work. No.
Yeah. So I'm looking weeks to months, and again, that took time because I've played around with different time frames. Sometimes when I'm home, I'll try a day trade or something like that. Doesn't work good for me. It's not my personality. But what I found, what I'm comfortable with, is that weeks to months type of trade. So it's kind of funny. So everyone talks about risk management, and that was people talk about it, but they really don't say what that really is. They tell you cut losses. Well, what does that mean? Some people it's 2%, some people it's 10 or 15%, and so that was, again, that's another place where it was kind of It took me a while to really understand that.
And we'll get to that in a second. First, I'd like to ask you, so I know you said you've kind of picked up things from everywhere, but since you're weeks to months, is there any specific book that you would recommend for people to read if they're interested in that kind of same time frame?
Sure. There's 3 books I think have helped me the most. And I've read quite a few, but there's 3 that helped me the most. The first one was William O'Neill's How to Make Money in Stocks. That book was like, okay, yeah, he spells it out. I get it. It makes sense. Stan Weinstein, which I actually kind of read within the last 6 months or so, was excellent. So Stan Weinstein did awesome. It's Secrets of Profiting from Bulls and Bear Markets. And the other one was Market Wizards, because understanding how the professionals think when they're in a trade, when they're thinking about a trade. I mean, like in my profession, it's a perfect profession, right? We're not allowed to make mistakes. And in the market, you're going to be making mistakes all the time. And so understanding the way when I approach the market, how to think like a market practitioner is what was different for me, was challenging. And I think Market Wizards, with those interviews that Jack Schwager did, were just phenomenal for me to understanding the mind frame needed for that.
For sure. I've got all of those books right behind me on that bookshelf. So I'm interested in, if you're a pharmacist as well, is there any like common skills that you think have helped you with trading that have kind of come from your actual profession? Because I find with engineering, there's definitely some things that apply, like pattern analysis, having a system, following a procedure. So I think those have helped me going into trading, but there are some completely new things. But do you find that there's anything that's helped you from the pharmaceutical industry that's kind of translated well into trading?
I think in my industry, it's about preventing mistakes, right? We want to be right all the time. So we create systems and redundancies within that system to prevent errors. And if we follow our systems, the chance for an error to go out is extremely small. And I think that's probably the best thing I can take from that industry, is that if we follow our system, the chance for an error is minimized. Never eliminated, but it's minimized.
For sure.
And I think that has been the best takeaway from that to carry over.
Great. And unfortunately, there are some people out there selling these $300, $500 courses. You said before that you think everything can be found for free on the internet. Do you think there's a better way to spend that $300 at the very start to kind of actually set yourself on a path for success later on?
Oh, 100%. And I'm not saying some of those courses aren't worth the money, and some of them may be. But I can say that there is enough information out there for somebody who's serious, obviously, that you can understand the markets and you can have an idea of what you're doing. Now, you're going to be wrong, though, because that's not enough, right? So one of the first things I did, which was probably a mistake, was, I paper traded for a while. I think that's the biggest mistake you can make. I think the best idea is to jump in there, small account, put $500 in a Robinhood account or something like that. Buy 2 shares or 3 shares or something. You don't need to have 100 shares to understand what it's like. The point is to understand your emotions and what it's like to make money and to lose money, and then how you deal with it, because that's really where it's at. So it doesn't matter if it's 1 share or if it's 1,000 shares. And I think that's what most people, if they're afraid to jump in, again, the best, like my first account was very small, was really small, because I knew I didn't know what I was doing. So I knew there's a good chance I was going to blow it up, and I did. But I tried all different things. I tried options, I tried this, I tried that, I tried day trading, whatever. And so I think that is probably the most important thing. And then again, there's so many amazing traders that have webinars and just things they've shared online that you can go back and you can, there's a treasure trove on YouTube right now, and just look up your favorite traders, whoever they may be, and you can see everything you need to know. But again, until you get in there and actually make the trade yourself, it doesn't really count.
For sure. And I think the biggest thing is to not expect that you're going to make $100 a day when you first get out of the gate. It's all about that learning your system, learning yourself, like you said, learning how to deal with that emotions. And if you're not profitable with $5,000 or even $500, you're not going to be profitable with 5,000, 10K, 50K. So learn while the risk is small, and then add on to your portfolio later on once you've had a more solid track record. I definitely agree with that. When I went from paper trading to actual money, it was a completely different ballgame, and it took me a few months to kind of recognize that and kind of learn to be systematic once again, and not really fear those small losses. So yeah, I completely agree with you on that. So I'm curious about your rules. Do you have a written document of rules that you've built up as you've become more experienced?
I do. Mm-hmm. I do. Actually, I made I printed them out just so in case I should have probably put on my screen, but so like I have a buy chart, right? So I make a flow chart like this. Mm-hmm. I don't think you see that well or not, but
I don't think I can see it. Is it?
Okay.
Do you have your camera?
Is my camera? My camera should be on. Let me. I don't know. Either way, but I definitely have written. Yeah, I've written rules, and I make flow charts. Mm-hmm. So like my stock selection flow chart. First off, it has the market has to be an uptrend, right? That's if I'm going to buy something, the market has to be supporting it. And then basically, is it showing relative strength? Yes or no? Is it near all-time highs? Yes or no? Right? And as I go through the flow chart, I'm getting closer and closer. I like to buy within 2% of the 23-day EMA. Mm-hmm. So that's on my flow chart. And I track that. Actually, I have a spreadsheet. I track how close I get to within 2%. Is volume showing accumulation? Yes or no? And if I can answer yes all the way down, it leads to a buy. If I answer one no, then it's don't buy.
I love that idea of having a flowchart. I've actually thought of doing that myself. I think it's a good way of visually showing kind of your mental process and break it down step by step. And like you said, if one thing is not acting right, if the general market isn't in an uptrend, then hold off on that trade and wait. You got to sit and wait for that perfect opportunity.
Yeah, and it's something that took a long time to understand. There's always another opportunity out there. Like you look at this one stock and it looks amazing, and maybe it's a little extended, and you reach for it, mm-hmm. and then it comes right back down or something. Mm-hmm. Now you're 5 or 6% underwater in it, and it's just that to your buy point now, and you're 6% underwater where you would have bought it anyway. There's always another setup out there. Mm-hmm. It's not easy. Easier said than done, but that's something that I have learned.
Yeah.
So that's.
Yeah. Go ahead.
I would say that's kind of how and I have a one for buying and I keep one for selling, and so I think that's how I do that.
Perfect. And I'm curious about this. What's your definition of extended? Because I think every trader says don't buy extended, but everybody has a slightly definition as well.
Oh, that's a great question. So for me, I like to buy near the 23-day EMA. Mm-hmm. So whether it's a back test or a sideways consolidation, whatever. If it's near the 23-day EMA or within 2% of it, that's where I like to buy. If it's now, and if we get into risk management, 8% is my maximum loss off the initial buy, right? So that's how I do. So if it's more than 8% away, then it's extended.
For sure.
Mm-hmm. And so the way I do, I keep an Excel spreadsheet with my stats and everything in there. And so if it's, within 2%, it gets a green. I color code it, mm-hmm. right? And if it's between 2 and 4, it gets yellow. And between 4 and 6, it's red. It means I bought it extended. And I shouldn't buy anything more than 6% away from the 23-day EMA. Mm-hmm. That's very extended at that point. And so I track my success, and then I correlate it back to the, my color coding basically,
within
2% or not. Mm-hmm. My entry point, exactly. And then, and then I see how I do. And obviously, the closer I get to it, the better my results are, obviously.
Mm-hmm. That's interesting because I think probably most CanSlim type traders were taught to not buy 5% above the pivot point, and that's kind of extended in that mind. So are you not kind of buying those breakouts? Are you more doing pullbacks to that 23 EMA?
Yeah, so I will buy a breakout if it's if it's gone through a very long consolidation, those are the ones I actually love. I love a big long consolidation within an uptrend, right? Because the trend is your friend, and it's most likely going to go higher. So, so if it's a breakout, I may buy it, and I may buy it, listen, maybe 3-4%. I may buy it in the yellow. I'm not a perfect trader by no means. I try within the 2%. But if I love the stock, it's breaking out. You don't know if it's going to retest or not. Now, your higher probability is to buy it on the retest. That is, for me, like, awesome.
That's what works for you.
Yeah. Like if it breaks out, it gets extended, then comes back and retests that 23-day EMA, almost like a bull flag type of retest, a very orderly, concise type of flag, or maybe a high tight flag, and that 23-day EMA can catch up to it. I will love that. That's perfect for me. That's like, love it. Absolutely love that. So that's what I look for.
Yeah, I do a similar thing with the it gaps up or makes a quick move upwards, then consolidates, and then the 50-day moving average catches up. That's kind of a setup that I like to look for. When it's pulling back to the 23 EMA, are you looking at the volume at all and what it's doing?
Yeah, so I do like to look at volume. And I like to, listen, the larger the big green bars are, the better, right? I mean, that's kind of how I look for it. So when I run a scan that combines fundamentals and technicals together, because I think that's the best of the breed right there. And so then as I go through the results of my scans, I look for volume. I look for accumulation because, the markets are supported by the big hedge funds and by the retirement accounts and then everything else. People running the big money, right? And so I'm watching to see, are the big money adding to positions in here? And I'm seeing these large green outlying bars every couple weeks, or clustered together. That shows institutional support in this. The chance of it floor completely dropping out of that stock is much lower, in my opinion, if you're seeing that type of institutional support. So I do watch for volume, and I do, and again, that's more an art form. Like I don't quantify that per se, but yeah, I'm watching the more, and you've seen some of my charts, man. I'll put arrows like look at this, look at that, look at that, look at that. Like I know that people are really, really interested in that stock when you see those big green bars.
For sure, and I love when you highlight stuff like that because it's so clear when somebody's pointed out like, oh, here's resistance, here's the big volume come in. So I really love your charts. Do you use TradingView as your main charting software?
I do, yes. Yeah. And like I said, the barriers to entry is zero. TradingView is free, right? Yeah. Completely free. Finviz, completely free. I do my scanning on Finviz. So there's really no, and trades are free now, right? So there's really no barriers to entry at this point.
But it's kind of a give and take because things are free doesn't mean you should trade all the time. Like me and you, we're going to be trading, setting our trades up on the weekends or putting in orders pretty rarely. But because there's that lower barrier to entry, people might feel inclined to be a little bit more risky, take more trades. So it's definitely a give and take now that commissions are done. So I wanted to ask you, when you take up a position either for a pullback or a breakout, do you go in 100% position right out the gate, or are you scaling in as you go?
Okay, yeah. And just to go back to what you said real fast about over trading, man, let me tell you, I was guilty of that for a long time. Because I was thinking in my mind, this is how you're supposed to do it, right? You're in the market, you're out of the market, you're always moving around and making money all the time. And it just doesn't, not for me at least, it never worked like that. And that was always my worst trading, by over trading. But as far as starting positions, yeah, I try to, find my spot, buy it. I tend to buy 15% position. Okay. So I like to keep 15% is my initial, my one-time buy usually, and then I manage the trade from there.
So is that 15% of your entire portfolio amount, or is that 15% of one kind of slot that you have for a stock or ETF?
Yeah, so it's my entire portfolio amount.
Okay.
So 15% of my account balance basically is I'll put into a position, and then I start to manage that trade at that point.
Okay. And at what steps would you take off a little? So is it if you hit a a percentage gain or that type of thing? What do you like to do?
Sure. So what I've evolved to and what really fits my personality, and let me tell you, there was such a calming effect when I found this. Like, it's unbelievable. It's like night and day. I was actually, and I'll tell you a quick little story. I was on Twitter, and a guy named Trader Amog, I don't know, you've probably seen some of his stuff, and he always puts his entries and exits and how much he goes up and down. And for whatever reason, that day I was reading one of his posts, and it just clicked. So everyone says take profits on the way up, right? That's what you've heard that maxim before. And everyone says, manage your risk. So for me, it's at 5%. So when I go in at 15%, okay, at 15% I buy my position, and I immediately put in 2 sell orders right after I buy. Again, I have a spreadsheet. I put in my position. It calculates this for me, so it's really easy. So my first sell will be at 5%. And the thought process behind this is that if it spikes up 5%, then totally craps out and goes down, and I have to sell, right? I have to sell the remaining 2/3, right? So I sell 1/3 at 5%. I have to sell the other. I'm pretty much going to be at break even. So I'm not losing very much on that trade, if any, or breaking even on it. Okay. And I move on to the next trade. So that's the way I manage my initial risk. And so if I get the 5%, I'm super happy. I'm happy to sell that first 5%. My second sell is at 20%. Now, I chose 20% for a reason. In William O'Neill's book, How to Make Money in Stocks, he talks about that a stock will move about 20% from a base, and then it will kind of base and consolidate again. And so I don't want my money to be tied up for a long period of time in basing out, right? I want to be able to use that money and make it work for me. So that's why I chose the second one at 20%. I think the movement of money or velocity of money, just like in our economy, is very important in your trading. For me at least, because I want to decrease FOMO, right? I don't want to be, fear of missing out on something. So I always want to be buying new positions, right? Or looking for setups. It keeps me fresh and keeps my portfolio fresh. So if I can take at 5%, take off, now I have more money to put into the next position. If I do it at 20, again, more money for the next position. But just like in How to Make Money in Stocks, I want to be in there for the home runs and the grand slams too. I want that 2, 3, 4, 500% increases. And so how do I get that also? How can I meld that all together? And this was my way of doing that. So I have a much smaller position that could become much more volatile, and it doesn't bother me as much because the dollar amount is smaller, but yet I can still be involved in those longer term uptrends and potentially have humongous winners. So for my personality, it's okay. I got my risk contained, hopefully. I'm making money move. I have my FOMO kind of under control to some extent, and I'm involved in big winners. So it just fits who I am just to a T. So it's been amazing.
I like that. I'm curious though, how you deal with earnings reports, because what percentage gain are you comfortable sitting through an earnings report, because that can be such a volatile time? Or do you sell like another third of your position before that happens? I remember you recently tweeted about PAS, and it was about to have an earnings report, but I think it was a new position for you. So do you mind kind of talking to that trade and like what you were thinking?
Sure. So first off, I didn't realize earnings were so close when I took the trade. That was my fault. I messed that up. But luckily, the day before earnings, it gapped up or went up like 5-6%,
So
which
sold.
took my first 5% off automatically. I didn't even try. And that was amazing because then it held me holding the earnings without any worries. Now, my absolute sell is 2 closes below the 65-day EMA.
Okay.
If the stock is 2 days holding below the 65-day EMA, for me, that's a change of character. It shouldn't be down there. And if it's down there, I don't want to be in that stock anymore. Could it bounce up the next day and go to the moon? Sure, it's possible it can. But I'll just move on at that point. So that's my absolute out. So even when I go into a position and I have 8% as my maximum loss, I love it when the 65-day EMA is closer than 8%. Because then my risk is actually even smaller based on my rolls. So for going into earnings, I'll hold. I have no problem holding, especially if I have a little bit of cushion. Now, if the stock's been wobbling and it's, I don't have my first 5% off, I've been in it for a few weeks, I may just close the position out if I don't feel good about it going in there. I think the risk may not be worth the potential reward. I think the risk could be greater. So that's one of those, we'll call it feeling things. Could it gap up? Sure. But it could also gap down. And so, but if I have my 5% taken off, I'll hold through earnings all day long.
Okay. Yeah, that's definitely a good way to do it. So you've said you use Excel, which I think is great. I do the exact same thing. Do you do any post-analysis? So you said you look back at what the setup was and whether it was a yellow, red, or green percentage gain. Yeah, how often do you do post-analysis, and do you recommend that for new traders?
Yeah, I mean, I do. I don't do intensive post-analysis. I know some people do, but I don't.
Mm-hmm.
But I'll look, and actually what I like about it is, again, I color code it as I'm going from all my closed trades, and even the open ones, as I'm selling on the way up, I color code it,
Mm-hmm.
if I hit my targets or not. And so I like to look at just the colors, not even because it tells me if I'm trading good or not.
Mm-hmm.
Like if I see a cluster of reds, that's a problem, right? I'm not doing well. I use pink for a very, very small loss. I use yellow for a small gain.
Mm-hmm.
And I use green for either hitting my target or a big gain.
Mm-hmm.
So I use 4 colors. And so I can see, like, there was a time towards the end of January, I had a cluster of pink ones, very small losses. So I wasn't trading very well at that time.
Mm-hmm.
And I can see that, cluster of greens and a cluster, and it just gives me a feeling of where I am in my trading. I keep track of it, but I can't say I do an in-depth post-analysis after my trades.
Mm-hmm.
Yeah, that's that.
Great. So actually, I wanted to ask you about AMD. Would you mind kind of moving to that chart, and we can talk about your entry and why you chose to enter at that time?
Sure. Can you see my screen or no?
I can't see it yet.
All right, I will bring you up right now, start sharing. I think you're good now, right?
Yes, I can see it perfectly.
All right, perfect. Okay, so let me just minimize you right there. All right, perfect. Okay, so this was the AMD chart,
Mm-hmm.
right? And so this is what I was seeing. I was seeing this kind of ladle-looking, cup and handle, whatever you want to call it. And here was the resistance that I was seeing here, okay? And so we hit it, we backed off pretty hard, came back, hit it, backed off. Again, you can see we're making higher lows this whole way, right? Mark Minervini is another great book. I like that one a lot. And Trader, he talks about kind of like a volatility contraction pattern.
Mm-hmm.
And so this had a feeling of that a little bit, kind of. But again, we just couldn't get over this area. But we started to base out here, and so this trend line was kind of valid here, and then this trend line was kind of valid here. So I bought in here. See how this kind of clustered up together? Mm-hmm. So I bought like right in here, right in the 23-day breakout right there, knowing it's below supply, right? And so I was totally understanding that, but I knew that I also had at least 5% to hit supply. Mm-hmm. So there's a good chance I was going to take 5% off, even if this came up here and failed, right? Good chance I had my 5% and my risk was low. So I bought it in here, and basically here's my 65-day EMA right mm-hmm. here, and it hasn't touched that since I bought it, basically. So it's been obviously an amazing run. And you see today, look, today's down. So I obviously have taken 2 sections off, so I'm only holding a 1/3 position in this right now. And it's but there's no stress. I was up, I think up here, it was like 90% I was up in this trade.
Fantastic.
And thank you. And it's been awesome run. It's been stress-free. Even if it comes down and touches this 65-day EMA, like I'm not that worried, because if I'm only up 50% in it, like I'm okay with that. Mm-hmm. Like that, it's a 1/3 position. I already took a bunch out. I've already moved that money into other positions. And chances are it's a strong stock. I think it's a true market leader. And so good chance that at the 23, right around here, it's probably, if it makes it down here, there's a good chance this will offer some, I don't want to call it support, because moving averages don't really offer support, but it may bounce, let's put it that way. It may garner some interest mm-hmm. somewhere in this area. It looks like there may be some support right here if it fills this gap or whatever. So that's my AMD trade. So again, it's my biggest winner currently, and we're right around probably 85% and up in that one. But it's been fun, and I shared this the other day. I think just for a future, I think this Stone Co, which is a Brazilian payment company, has a very similar look. Now, when it spiked up the other day, I was not interested in buying it because this handle needs to kind of build itself out a little bit. You know what I'm saying? So this is what I'm watching for a potential, buy in the future at some point if it works for me. But I do think they have very similar looks in just their pattern structure right here.
Yeah, what I love about this AMD trade is it's in a nice overall uptrend. It's been trending upwards. It's got a nice deep consolidation period, and when you actually entered, you were right by your support levels, so you knew when the trade would have failed based on your rules. So you already had a plan going in. I love that. How did you decide on the 23, the 65, and the 150?
Really, it was trial and error. I've tried the 20, I've tried the 20, 50, 200 I used for a long time, actually. So my thoughts were, a lot of people are using the 20, 50, 200, like a lot of people out there, right? Those are probably the most common ones to use, in my opinion. And so do I want to be with the herd, or do I want to set myself away from the herd a little bit? And I decided I want to set myself away from the herd a little bit, right? So everyone talks about 50-day support, right? The 50-day moving average. And so I chose the 65 to be away from that. So let it, so if it dips under the 50-day, right, and shakes people out, me looking at the 65, I won't get shaken out in that instance. So that was my idea, and I always like to have a short term, a medium term, and a long term moving average to help me define trend. Short term trend, medium trend, and long term trend.
Great, and it's interesting because I got into AMD just a little bit later. There was after it moved up past your point and then consolidated and then had a big green day. That's the day that I bought it. So not quite there. The next big green bar. So not that one. So I bought it just a little bit later. But I love the fundamentals. I love the uptrend it was in. So it's interesting that we're looking at the exact same stocks. So you say you use Finviz. Would you mind going to Finviz and kind of talking about what you look for in the screener?
Sure. So this is the screener I use. This is my favorite screener. I use a couple of different ones, but they're all kind of variations on IBD type criteria. This is the one that recently that I really liked. It's not looking too pretty today, but so the first thing I do when I look at my screener is I want to make sure this is in an uptrend, right? I don't want to buy stocks in a downtrend, right? I want them in an uptrend. So automatically price above the 20, the 50, and the 200, right? If price is below any of these, I'm not interested in it. I use $5 a minimum price because I'm not interested in stuff under $5, and I want to have some liquidity in there, right? I think $200,000 is 200,000 shares traded average is fair. So that's kind of how I set up that. And then for this one, I'm looking for high earnings per share. Boom, boom, boom. 30, 30, 30. So this is my 30, 30, 30 screen. And so then it gives me my list, right? So here we go. And you can see a lot of these I've been posting on recently, right? You've seen these. There's Stone Co right there. SGen I have a position in now. IIPR, Purple is on my watch list. A lot of these are. And so at this point, I'll take each one of these and I'll then just put them into TradingView and I look at the chart and I do my technical analysis on there. And maybe 2 or 3 of them are in or close to proper setups for me. And only those, then that becomes my focus list. And I'll watch them for a couple of weeks. I keep a trading, a watch list journal, we'll call it that. And I'm always, dating it and saying what I'm saying. Dating it, saying what I'm saying. Adding to it, sometimes I'm, crossing off, whatever. And so then I always go back to those, and then every day I look at those. Every single day I get home from work, I look at them and see what they did for the day, if they're setting up, and what their characters are. So I get to understand the way they're moving.
Perfect. But yeah, I wanted to ask you. So since you're working full time as a pharmacist, I understand.
I do.
Yes.
Yes.
So do you place limit orders to enter your trades, or how do you do it?
Always limit orders.
Limit orders.
I always use limit orders. That's the only thing I could do, because of me not trading full time. So yeah, always limit orders. If it hits, amazing. There's sometimes, and what's kind of cool about limit orders is that you could be completely someplace else, and boom, you come back and there's your position. Or you know what, you get the fill you want. That's the other piece. Do you miss out every once in a while? You do miss out every once in a while, but that's okay. And even when I sell on limit orders too. So, like there's things after hours, that will go and hit, and then it'll sell. Like I'm in Kroger right now, and when Buffett announced that he took a position in there, it sold. I'm like, huh, Kroger sold. I was break even on that, and boom, it sold immediately. I'm like, what the heck's going on? And that's what happened that day. So yeah, I don't want to be a slave to my trading, and so I always use limit orders.
Interesting. Yeah. Definitely my goal is, I really like this. I really enjoy it, but I want to have this separate life as well. So what you're doing is probably what I'll end up doing once I get my full-time job as an engineer. So yeah, very interesting. So one thing I like about your YouTube videos is your analysis of all these different ETFs, and how you kind of gauge market health based on these ETFs. So would you mind kind of going through each one that you use and kind of talk about what you like to see, what moving averages you like to see it above? Yeah.
Sure. All right, so we'll get back on my. So I keep I have a whiteboard in my office, and I kind of keep a list of what I feel is the most important ETFs. But I have a database here, and here's and it's basically each sector, some important subsectors within that ETF. I look at world ETFs, I look at metals. So I keep this, and I go through this probably once every couple weeks. I'll go through every single one of these and just see what's going on in the market and what am I missing, right? Because sometimes there's movement and we don't see it. So I go through all that, but I feel like these are the most important. Okay, so I going through your indexes, obviously that makes sense because that tells you kind of market health. Everything's looking good there, right? QQQ looks exactly the same as SPX. IWM is under supply, here's all-time highs, and it just can't get going for whatever reason, right? And then you have the Dow Jones, right? This composite average, again, looks very similar to SPX and QQQ. All right, that's good. So we know the market's in an uptrend, and that's literally what I'm getting from those first 3-4 charts. And then I start looking at, well, which sectors are the most important? And to me, it's going to be financials. And going back, you mean what I'm seeing here on the weekly chart? I mean, here's your 2007 highs right here, and we keep testing that area, and we try to break out, and it's not working real well right now, so that's concerning. We'd like to see it kind of move higher, and it's coming back into this range below the 23-day EMA now. Again, that's a little concerning right there. But so I look at the XLF, and I look at semiconductors. I think those are two really important ones. Again, beautiful uptrend in semiconductors. But again, now it's breaking right at the 23-day EMA right here. So it's an interesting spot. And the next is wood. So lumber is actually, to me, very important. It's a forward-looking indicator, and it kind of tells the health of things like construction and house building and demand for lumber. It kind of equates to jobs in a lot of ways. And right now jobs are great, and lumber looks like it's putting in a nice little bottom right here, but it still can't get above the supply. So if this was to break down, especially if it broke down before the market breaks down, that would get me extremely cautious. So I like to watch lumber there. The put-call ratio, let me change this to a line chart because it's so much easier to see. All right, so here's the put-call ratio. I designated these areas as important. There's no other reason why these orange lines are here, except, and you can see, so people can remain bullish for a long time. This is not a sell signal. It's a take notice signal, right? And have we been more bullish? Absolutely, we've been more bullish in the past, right? But so this is a take note signal on the bullish side. Now on the bearish side, I find this to be a more actionable signal. If I see the boat tip all the way to the bearish side, like here and here and some of these, that would be okay. Let's start looking for the long opportunities at this point. Okay, doesn't mean that they're going to be there, but I'm now going to be really searching to put some money at work if I have a bunch of cash on the sideline, which hopefully I do at this point. So this is more of a signal. This is a kind of a take notice, but we could be in this area for a while. And if you see, we've been in this area, since October, and the uptrend's been great. And this is kind of indicative of a good, healthy uptrend. Now if we get in this area, we'll see. But we're not there yet. And that's the thing, we're not there yet. So there's nothing bearish for me about the put call ratio right now. And actually, these quick resets keep the bulls kind of in check, right? So they're in check at this point. Now, if we start hanging out in this area, that would be a little more concerning, right? But as long as we're in this top half, I'm not too worried about that. SPX TLT, I look at this, basically, are we bullish or are we bearish in general as a market? And you can see we're starting to roll over here. And so there's a little bit more bearish sentiment coming on, people moving into safe haven bonds. Okay. I like to look at high yield. I think I posted this chart this morning.
Yeah, I saw you post that.
Yeah, so if we can break out here, if people are going to high yield bond, that's a risk on sentiment, right? And so again, for me, this is a sentiment type indicator. I'm not trading high yield bonds, but this is sentiment. If we break out here, it means risk on. Let's go at it. If we roll over here, we start breaking these moving averages. That's a risk off, and it's time to get a little bit more defensive in my holdings or go to cash. I like to look at the VIX. Again, I'm not trading VIX, but I've identified this 16.5-ish level, somewhere around here, as we're bullish in this range, and it's a little bit more bearish or volatile in this range. Again, it's more of an indicator than anything else. SPX versus the world minus the S&P. You see, I'm not afraid to type that right. It looks better. So basically, are people putting money into risk in the United States, or are they putting into risk outside the United States? And as of right now, people are still very bullish U.S. equities. So that bodes well for the U.S. And the last one I really like to look at is the Value Line Geometric Index. It charts the median stock, so it gives me a little bit of a breadth indicator. And you see there's a little false breakout here, came back, now it's chopping around. Again, it's more of an indicator than anything else. And right now it's inconclusive, right? It's trying to break out, but we'll see. The I-100 is another good one. The largest companies in the world are in the I-100, right? And it's got a beautiful uptrend. And we're now challenging that uptrend. Break below here, that'll be a change of character. Doesn't mean we're going to crash. It means that maybe we need to go sideways for a while to consolidate this big gain. And so it's just something to watch, right? Now, if we get to new lows and we start bringing the 65-day EMA, well, that would change my mind potentially. And so I look at that. That's how I do my weekly videos. And I think sectors, man. Looking at sectors, I look at my sectors every week. Like I don't want to be involved in XLE in any way, shape, or form, right? But XLK, all right, we're still in an uptrend in XLK. That looks good. So deciding where you want to be. Not every sector is the same. So who's showing strength? Who's showing relative strength? And then and what stocks within that area can we capitalize on?
Interesting. Could you go back to wood for a second?
Absolutely.
It's very interesting how this started breaking down before the weakness last December.
Yeah. So you're talking about December of 2018.
18, yeah.
18, oh yeah, right here. 18, yeah, right here. Exactly. Yeah. This was a perfect example. It was breaking down all October into November, and boom, and look at this. Look when it rebounded. right? It rebounded, it bottomed right as the market was bottoming, and it's boom, shot back up. And so I think this is an important area. And again, it sometimes will give you that 6 month or so lead time, into, and there's the highs right there, into a potential market move. Is it perfect? Nothing's perfect, but this is interesting here. Again, if we break out higher, I really do like that the future market, at least in the next 6 months or so.
And it's an election year too, so we have to take that into account.
Absolutely. And listen, and people are working, right? Don't ever discount that, man. Unemployment is extremely low. When I hire for my pharmacy, it's hard to find good candidates. Okay, that tells me that people have jobs, and it's hard to find candidates. And so, if people are working, they're putting their money to work. They're buying goods and services, and the economy is going to hum right along. When you start seeing a change in employment, that's another. Again, it's more of a fundamental thing, maybe, but I know I pay attention to that.
Well, fantastic. I think you've given us a lot of great stuff. Is there anything else you'd like to say?
I think if I was going to add anything else, trading, I'm sitting down and watching a screen. I think one of the other things that has made a big difference in my trading is moving my body when off market times, and even when the market's on sometimes. If I have my orders in, you know what? Leave the screens. Watching every tick doesn't help you.
For sure.
It just doesn't. Watching 5-minute charts, which I've done, it doesn't help. I've increased my amount of exercise within the last year or so. I started doing jiu-jitsu, which has been amazing. Can't recommend that enough. And just, that helps with the mental clarity, I think, more than anything else. So don't discount getting up, moving, walk around the block if that's what you need to do. But sitting down is dangerous to your health. And I think if I was to add anything, we need to take care of ourselves. Health before wealth, right?
Yep, fantastic. Thank you so much, Jack. If you're not following him on Twitter and on YouTube, I highly recommend it. He's been posting some great stuff. Once again, the links to both of those will be in the description below. Jack, thank you so much for giving us your time and sharing some great insights.
Richard, this was a lot of fun. Thank you very much.
Oh, fantastic. All right, have a good one, Jack. I'll see you later.
Take care. Bye-bye.